Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday evening, actually, on April 7th, 2020, and we're about 6:15 p.m. Central Time. Now you're going to say, boy, he's late. We're already open into the Wednesday trade session. You're right. And I admit what I did, and what I did was simple. It was 75 plus degrees in Chicago. I've been cooped up for a week, not going out at all. I took some long walks and just enjoyed it. I haven't even begun writing my nightly report. I will. I was looking coming in for today, and if you're a morning subscriber, you get my morning video. I couldn't have been clearer. I was looking for this market today to run into a brick wall against the upper Bollinger Band, the 200-day average, which is all above the market in a number of these different parts. And going into the last hour of trading is when I took my walk. I said, well, I guess I'm not right, because I was looking for a Tuesday reversal to take place. We were up, 900 points in the morning. I didn't look very good on that, but you needed, in order to get up to these numbers, you had to have a big rally, but I was looking for more of a break. And in the afternoon, I just left. You know what happened then. You can see the metals backed off. This gold market was $17.40. It's back down $70 less than that. Dollar, 84 points lower. These aren't small moves. These are monsters, very hard to control. Bonds and notes, okay, came down, but what's really going on? We'll talk about it. Energy markets, if you're trying to figure out what's going to happen between OPEC plus, the US, Canada, Brazil, and everybody gets involved, I wish you the best. Okay, it's too difficult. You don't know what's on everybody's agenda. I would like to see the Texas Railroad Commission, do a forced cutback, of course, so that we can get the markets in balance and you don't have to wipe out all our producers down in the Permian Basin. The big boys will survive, but some of the small boys won't. You don't like to see that happen to them, but it's probably going to happen one way or the other. When you look at the S&P on a weekly basis, we're only up 155 points for the week. I'm, of course, being facetious. It's a great gain of 6.24%. But if you look on a closing basis of where you were and where you are, it's just a bounce. It's not a change. I think it's way too premature to decide that this was the low and the market is ready to go just straight on back up to resistance wherever that 18-week average of closes is. If you think so, fine. I didn't put the numbers on here today. All I had to do was click it to do that. But what I wanted you to see is I've marked off with the blue lines from there to here. That's the high and low. These are a 38%, 50, 62% retracement. When I did my stock index report that's now gone, I only put my reports up for 3 days as videos on our website. I was looking for the resistance at this 38% to 50% zone. I don't think it's going much more than that. I could be very wrong on it. I mean, what can I say? But so far, it seems to have stalled out there, right? When we take a look at the action right now on the swing line, you've got a lower low and a higher high. Now, the swing line I teach in my charting course, which what a great time for y'all to take it, and the course is not expensive. It teaches you what this does. And what this does is visually, it gives you an idea. Number one, are you trending? And if you're trending, what's the risk associated with the trend until the trend is broken? Pretty simple. On its own, this is not trending. Lower low, higher high is not a trend. And what the swing line does is it looks back at the day before it, and I have a set of 5 rules that determines where the line to the current day's trade and where it should be drawn. It's all done automatically, so you don't get to play with it, and if you will, put your own thoughts on it. Use a different tool that you create. When I look at it in relation to the 18-day average of closes, which is the red line, or the 200, or the 100 in green, what do I look at? The longer-term averages we're trading under. That gives the market actually a downside bias. The shorter-term 18 we're over, gives it an upside bias. So they're fighting with each other. They were in perfect harmony when you got a crossover here. And the other two were above this, and you see the blast that you got. It almost happened right after that occurred. So I look at that and I watch to see what they're doing. Right now, as we got over it on pullbacks, sharp ones, I'd look for that 18-week average, day average to be the support zone. What about resistance? Now I'm going to stick with what I teach. What I teach is, especially when you have a wide Bollinger Band, unlike narrow ones at the top here. I have a different rule for the ones at the top that were up here. Okay, I don't mean a top in the market. It turned out that way, but you know what I'm saying. The first time you hit it, be it to the upside or downside, I think the pros, be it the algorithms, whatever, are looking for a zone to take money, and because 95% of the time you'll trade within that Bollinger Band, that is a logical spot. There's other tools you can use, but that's one I'd look at. This morning, so I'm looking, you hadn't hit these when I put out the morning subscriber video. When they hit them, I'm going, well, that's great. You can go over them. There's no magic that you have to stop right there, but you're in a zone. You're in a heavy resistance zone at that point. And you can see the market backed away. In terms of overbought, oversold, or locked into a trend, you're overbought. So I've had a nice bounce in a market. We already saw in the bigger scheme of things, it's nice where it is, but when you go to the weekly chart, it doesn't look all that impressive. And you hit a resistance point that the market's paying attention to. Also, not in a trend. You are in a trend in the NASDAQ. You've had a pattern of higher lows, higher highs right on through. Yesterday we talked and I said, you know, you're right up to the zone where I think people are going to take profit, but between that Bollinger Band and 200-day average of closes should be some formidable resistance. I bet I use that word. You got right into them and came smashing down. That's not a little bit of a break. You went to 83.03, and at the end, you finished up at 80.12, and the low was 79.48. So you were breaking fairly hard at the end, and right now you're challenging that again. You're overbought, still in that resistance zone, and the first challenge proved that the pros took some money off the table. What about the Dow? Here we are yesterday. And I'm looking, you don't have the other moving averages there. They're not out here, but you've certainly got that Bollinger Band. You hit it today and you're backing away. Still overbought market. The Russell's the weakest. It missed it. I wish it would have hit it, but it did do something else. In the process of the rally, you broke a pattern of lower highs and lower lows. You had already closed over the 18-day average of closes, so the bias was already up, and the market was so-so with momentum pointing to the upside, and you confirm that, and now you're pulling back. I still don't see a trend. So basically, in all the stock indices, I really think you're void of trend except for the NASDAQ, which has hit key resistance points in the market. They have all hit key areas. In the VIX, you didn't quite make it to that lower Bollinger Band. I was certainly hoping you would. Will you embed down the road here? Both numbers are under 20. Let's get back. If I can get back one more day, I'd like to. Come on, don't fight with me. It's determined to fight with me. Radio signals. There you go. Day before it's under 20, that's Friday. So the day before it wouldn't be. I could just see it. So you had 2 days with yesterday, and today is the third day, and it would be under the 20 level. I think you're there. Can't fix that one. I'm sorry about it. But the radio signal, where it goes. But to make a long story short, you're in an area here where I'm going to look for some support, but the trend is still down. It is not pointing to the upside. So that sort of hurts my mix in the stock indices. In the T-bond market, you've lost your attempts here at the embedded reading. You can see. Never did really get there. You had both numbers over 80 right here, and then they turned right back down. Overbought market that has fallen back to the 18-day average, the line in the sand, and it's now trying to figure out, what do I do next? The pattern is not a trend. You have a higher high, lower low, and if you really look at it, you've been going sideways. After this big move here, you just started going sideways again. Don't throw in the towel. This market hasn't thrown out bear signals either. It's just not bullish right now. In the 10-year note, back to the 18-day average. It's like going back to the drawing board. Now the market's got to figure out what to do. You and I had been talking in the other videos that we were doing at the end of the day that this area had come into the challenge here, but it wasn't taking out those highs. That acted as a resistance point. In the dollar index, for the first time in a bit here, you're back under the 18-day average of closes. The pattern is still one of higher lows and higher highs. It is running against this 18-day average day in and day out, and it's got divergences happen. You've got momentum pointing down in the slow stochastic. The bias is down because you're under the 18-day average, but the swing line is up. So this is what I call getting just chopped about. And you can see you get a day up, you give it up. And it's hard to hold on. 80 points at a time is $840 in this market. That's not an easy move. In the Eurocurrency, today's action puts this market like this. Now you got to go, You've had a pattern way up here from lower highs, and up until today, you had lower lows from that low to right there. With today's action on the swing line, you now have higher lows, lower highs. So you're doing this, you're narrowing in, and guess which number the market's deciding to fight the battle at? The 18-day average of closes. I give the nudge as to which way, if you had to push me to the bear side because of the legacy of lower highs, lower lows at the first place. Now you've gone into the stall. The pattern resumes if you were to take out 107.91.5, and to negate the pattern on this chart action, remember chart action can change every couple of days, you'd have to get way up here near that 112 zone. In the Japanese yen, you've gone neutral. You've now got a higher high, a lower low, and you're fighting at that 18-day average of closes. Bitcoin, overbought, trying to get up to that upper Bollinger Band, and you've got to keep in the back of your mind that we're about 5 weeks away from when that event happens where the supply of Bitcoin halves going forward because the algorithms that are used to create these coins, the mines, if you will, for the same amount of energy, all the computing power they do, they can only produce half as many as they have. That's how it's set up. So the market realizes that, and you have to wonder what's going on. But the chart action is what I look at, and the chart action is bullish but overbought. In the differential between Brent and WTI crude, well, looks like $1 was too cheap, and $3 or so seems to be where the market's hanging in right now. When we take a look at the chart action, we're overbought in an uptrend, higher lows, higher highs, solid resistance as far as I can see at 34.53, and I'll stick my neck out. The first challenge of a Bollinger Band is often where you see money come out of the market. Well, these people that have bought, that wouldn't be a bad rally, but I'm also looking to see if these bands keep narrowing in and change that pattern on it. We'll see what happens. And again, you're almost forced, if you're an energy trader carrying a position, you're going to be forced into that OPEC meeting. Do you want to be there? That's up to you. I'll let you decide that. In the WTI, the same pattern. Higher lows, higher highs, but overbought. Resistance up here at the 30.50 area. RBOB Gasoline. This is what I'm saying when the bands start really narrowing in. Do you see what's come about? Look at all of a sudden what's happening. That means volatility has come out of the market. And I know you'd say, well, what's he saying there? But it's true. That's what does it. And that forces these bands in right now. You're losing the big day-to-day ranges. It's more or less going sideways here. And now, again, the market's getting ready for this OPEC meeting. In the nat gas, I think we understand this move. The market is betting that if the U.S. does anything to get and make this deal between Russia and OPEC happen, that U.S. production, with or without that deal, is coming down anyways, and that's what this market's looking at. In addition, we take a look at the chart. As far as I'm concerned, take the name off the chart. I still say the pros are coming out here, even with warmer weather coming, even with that possibility. Maybe this is an important low. I'd argue for that. But buying over a Bollinger Band, not going to happen on my watch. So we talk about a lot of these technicals, and I don't do the writing for the Linn Associates. I do my own division's writing, and that's unique to us. But When we do it, we talk about all the futures markets. So we have a whole team that writes these reports and puts out oral updates for you throughout the day, by the way. So you really get a feel for what the markets are doing. David Hightower, if you watch the Hightower reports, one of the people that Linn is associated with. We cover all these markets with a lot of data. If you're an options trader, a spread trader, if you're an end user, whatever the products are, we talk about it. We have a big ethanol division, believe it or not. So if you're interested in this, take a look, go to our website. You can sign up for the free trial to see what we put out with people, and there's all our other free offers there as well. In the meantime, I'm Ira Epstein. I'm going to go have dinner at some point here, but boy, it was beautiful. You have a good day, and I'll see you all tomorrow.